The JSE, I have got Klipin here, is from SA Stock Brokers, and we're talking about Comair. We saw the results coming in last week, and we also saw a trading update yesterday from Toger Brands, so we may touch a little bit on that. But let's begin, Ron, by looking at Comair, the results that we saw coming through. The numbers on themselves, I mean, not great, but in the context of the environment in which the company is operating, perhaps understandable. Top-line growth flat, earnings helped in a big way by a containment of costs.
Very much so there, Godfrey. If you have a look at the flattish top-line growth in revenue, it's a function of what's happening out there in the economy. Fewer people are travelling, both business-wise and leisure-wise. We're seeing more and more businesses going into conferences, calls, and via media and the like, and people pulling in their horns. You have also seen a movement from the higher cost airlines charging full fares into discount airlines.
Read SAA and perhaps British Airways.
Perhaps I would think so there, Godfrey. Yes.
But what do the numbers say about the growth of this industry going forward? Because this is 2010. This is the year of the World Cup. This is the year of South Africa. And therefore one would expect that, amongst the industry that are going to benefit from the upswing and the inflow of visitors that we expect would be the airline industry.
Remember, Godfrey, it's only a period around about 6 weeks where airlines will be raising their fares, particularly for the quarterfinals and for the finals. Otherwise, their fares will rise, but not all that substantially. We have seen Comair acquiring 2 new generation aircraft, which are very, very much cheaper to run. Fuel costs are believed to be something in the order of 20 to 30% lower than their older generation aircraft. So margins should increase on that score. Certainly the 6 months to June are going to be much better, I would suspect, than the 6 months to December. Also, you do have more spending taking place. People have started to deleverage. So we should see some better growth in top-line revenue coming through in the 6 months to June.
Yeah, let's talk about 2 other things that I took out of those results. One is the strategy to buy airports to operate from. We know they've been doing it successfully in Lanseria, and they've brought down their costs significantly. We do know also they are in the market trying to buy Durban, though one has to wonder whether they will be able to buy Durban given the concerns that have been raised by others, including One Time, and of course the government's own concerns that giving them Durban would allow them to take away traffic from King Shaka.
Very much so there, Godfrey. I think the strategy has been really brilliant by using Lanseria flights to both Durban and Cape Town. The costs are much, much lower than OR Tambo. The Durban scenario, it looks like the government or semi-government agencies are not going to allow the Durban deal to take place, and they will be saddled with a higher cost King Shaka airport there. But certainly in the longer term, it looks like fares could well come down with flights from Lanseria versus OR Tambo,
which would
giving them a competitive advantage.
Definitely good news for all of us. I mean, who doesn't want to fly? But what about their decision to buy 8 new aircraft by 2014, I think, if I remember correctly? That suggests some kind of some assumptions they've made around growth in passenger numbers in the local market as well as perhaps the regional market.
I would suspect so. First of all, they are increasing their routes into the rest of Africa. They are looking for fuel-efficient aircraft with lower running costs, as we said, probably around about 30% lower than their current fleet. They will be increasing their balance sheet by 2014, I think it is, from about 1.7 billion to about 3.4 odd billion, with the addition of more aircraft. So there is a growth phase. They do see low-cost travel in South Africa and in the rest of Africa expanding in that period, and they are taking a longer-term view.
So would you be nibbling? Would you be buying them now?
At a PE forward of about 13, the share is not cheap relative to other small caps. Looking at the market cap, I think of 1.125 billion, I would be looking to wait. I would wait until perhaps the second half of the year, to see what the results are, to see if they can gain momentum from the World Cup and from an increase in flying.
So Gideon will have to work a little harder for your dollar there. I saw a statement yesterday from a currency strategist saying after the World Cup, when the final whistle blows on the final itself, sell the rand, which would mean trouble for companies like Comair. But quickly, Ron, what was the last company that you bought into your portfolio?
The last company was Pioneer Foods. I like the business model. We're seeing Tigers with fairly flattish sort of bottom line revenue. They've reached a critical mass. In the case of Pioneer Foods, they still have a long way in terms of capturing additional market share. The business model in terms of lowering costs by upgrading of CapEx, by bringing in the economies of scale of top-line revenue growth.
Right.
I think that's going to be one from the future. You look at their brands, both in staples and other brands, they certainly appear to be where Tiger was maybe 5 or 10 years ago. So the potential growth is certainly there.
Though there are regulatory issues around there, it's definitely interesting to see if they are going to accept the punishment from the competition tribunal or take it today.
I would certainly hope that they pay the 195 million and that they get on and walk away and get on with their business.